Hello. Your next chapter is your taxation of business trust, or it is also known as taxation of REIT. That is your real estate investment trust. So now how this works is there is a business trust. There is a business trust or REIT which invests with 50% vote, which has 50% voting share in a SPV of an Indian company, that is your special purpose vehicle. So this invest 50% in this. Now your SPV, your Indian company, that gives this business trust dividend, interest, and any other income. The income that is transferred to your business trust invest in your SPV, and SPV in return gives dividend, interest, and any other income. Now your business trust itself has a business of with regards to rent. So therefore this person earns any rent income. So now this person, that is this business trust, will transfer to the unit holder. The unit holder invests in your REIT. So now this unit holder will get dividend, it will get interest, and it will get other. That is, this was already it was receiving from the SPV. Now this will also get additional rent because your business trust earns rent. Okay, so this is what the structure of flow is from. So now any interest from SPV, that is this part, interest from SPV will not be taxable to business trust. So if you want to see, basically nothing is taxable to business trust. Interest is not taxable, dividend is not taxable, the rental income that it earns itself, that itself is also not taxable. On any other income, your LTCG and your STCG, that will be taxable to the business trust. So to the business trust, interest, dividend, and rent, neither of these will be taxable. Only your other income will be taxable to the business trust. Other income, that is your LTCG 112, will be taxed at 20%. Your 11A will be taxed at 15%, and others will be taxed at your maximum marginal rate of 47.24%. Okay, so sir, who will be taxed? So that is the unit holder. The unit holder that receives this income, these will be taxed. Now my unit holder can be a non-resident or a foreign company or others, that is means the resident person. So if it is a non-resident or a foreign company, 5%. So anything in black is your tax rate and anything in green is your TDS that will be deducted by the business trust. So it will be your NR will be taxed at 5% and TDS will also be deducted at 5% in case of any interest. If the dividend if the dividend is received and the SPV has paid tax at 22% under section 115 BAA. So if the SPV has paid tax at 22%, then in such a case your NR or FC will be taxed at 10% and TDS will be 10%. Okay, over here others was taxation will be normal and TDS is 10%. Taxation is normal, TDS is 10%. Taxation is normal and TDS is 10%. So try to find patterns so that it is easier to remember. Great. So black is your tax rate and green is your TDS. And for NR and FC, if the if the SPV has paid tax at 22%, then dividend will be taxable at 10% and TDS at 10%. However, if SPV has paid tax at normal rate, see, it will not be taxable to anybody since the SPV has already paid tax at normal rate. Okay, now your rental income to NR or FC, TDS will be rate in force and taxation for both of them is normal. However, for my residents, the taxation is TDS is 10%. Clear? And since my other income is already been taxed to the business trust, it will not be taxed to the unit holder. So if you see this table clearly, if you spend some time analyzing this table, you will see that if my income is taxed to any one of them, this income is not taxed again to anyone else. And this is a unique case where my income is not taxed to anybody. This is because my SPV has already paid tax at normal rate. Clear? So with this we are done with the chapter. I will pause the video for 1 second so that for the students who do not have the notes or who cannot afford these notes, you can take a screenshot of this table so that it becomes easier to learn. I hope this chapter is made easy and I will see you in the next chapter, that is advanced tax and interest.